Intel stock continues to disappoint stock market investors. The company's latest quarterly earnings results, at least, were better than management was forecasting, and the stock price got a little bit of a boost following the earnings release. But what's really going on with Intel stock? That's what I'm going to dive deeper into in this video, looking at the comments made by the company's management team, discussing not only their short-term quarterly results, but also longer-term, what they're thinking about the company's prospects and cost structure. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So as you might already know, the board of directors pushed out the former CEO, Pat Gelsinger, and they are now being run by co-CEOs. And it's only been a couple of months now since the co-CEOs took over control of the company. And one of the first comments made by Michelle Johnston Holstus is that there are no quick fixes, and we are committed to improving our performance and rebuilding our credibility. And that is true, and I've been talking about that for over a year now with Intel, and that is this company is not going to start reaping the benefits of all of its investments until several years into the future. But to make matters worse, some of the initial results we've gotten from those investments are that they haven't been very effective. Their products didn't turn out how they were expecting, and they had to make adjustments and recalibrations based on the feedback they're getting from the marketplace, which hasn't been what they were hoping for. And so now they are focused on making more focused investments across the business and not being so broad in their ambitions. And they're prioritizing areas where we can drive differentiated value. So they want to focus on areas where they feel they have advantages, where they feel they can deliver value to customers at a cost-effective way. It's no use in trying to go after markets where your competitors can deliver that same value at significantly lower price points. You're not going to gain very much traction. Either you're going to have to sell your products below your cost and you're going to lose money, or you're going to have to sell your products at a price that's much higher than your competitors, and you're not going to gain very much market share. So it's not prudent going after those types of opportunities. And they also say they want to simplify the business and become a leaner, more efficient company. And for Intel, I think that will be extremely helpful, because what they've proven in recent years is that they couldn't really handle all of these things happening all at once. They didn't have the infrastructure, the talent, the organizational efficiency to handle this ambitious expansion that was initiated by the former CEO. It wasn't going as well as planned. And that created the panic from shareholders and from the board of directors that ultimately led to the former CEO being ousted, is because things were not going as well as expected or anywhere near as well as expected. So one of the things they're trying to do is listen to their customers. And they should have been doing this all along. I don't know why this is now coming up, but what Intel needs to do actually is just execution. They need to be better at creating products that the market wants and delivering them in a cost-effective manner. And they already know the products that their customers want. They've been offering these products for more than a decade now. And then the new category for semiconductors is the area where they can develop and listen to customers on what they're needing. But the core of the business for the PC market and the traditional data center market, it's been relatively the same for roughly a decade. Intel's troubles have been on executing this business, on investing effectively in research and development and keeping up with the technology. That's where they really fell behind. So Intel said that their foundry business drove incremental operating efficiencies while achieving key grant-related milestones. And that's where the previous CEO had invested aggressively, is in building the foundry business. And the expansion plans were made even more ambitious given the government support, right? The government promised to give Intel tens of billions of dollars in grants and loans to facilitate the expansion of manufacturing capacity and technology within the United States. And that's what really increased the level of investment for Intel and the timing of that investment. They also said that they still believe that the core x86 architecture and the ecosystems they've built and invested in over decades create a great foundation. Our customers shared this view, but they need us to improve our execution. Precisely, that's what I talked about a little bit earlier. They need to improve their execution. If they tell their customers they're going to have this technology at a certain date with certain ability to deliver a certain amount of units at a certain date, and then support that technology with research and development to build the ecosystem and continue to develop and help the enterprises that implement their technology. All of the product and service that goes into a product that they're selling, that's where they've had difficulty, is in delivering that value that customers expect from Intel, that customers expect from other participants in the industry, right? And that's where Intel has lost competitive advantages. Businesses look at what Intel offers and their inability to deliver these effectively, and then they look at other companies that they're competing with and they're able to deliver much better. And so these enterprises, instead of choosing Intel, choose other enterprises because they've just been better at delivering the value that they say they're going to deliver. So execution is really the trouble that Intel finds itself in. And it's not alone in this type of situation, right? Many companies face executional issues. Starbucks, I just reviewed Starbucks' latest quarterly earnings results, and Starbucks is going through similar pain points. It's grown to such a scale that it's difficult for them to just execute their day-to-day operations. And Intel has grown to a similar situation in its inability to deliver on the values its customers expect. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.